Dave is looking across them, looking across the world, and it's consistent with the view that he's had for a while now. And if you go out, because we've talked about this at length, he and I, as you go out and you look at a Facebook or you look at an Alibaba and you look at their growth rates and you go out 2-3 years, they're extraordinarily inexpensive. So it's a consistent view. I think his equity portfolio, based upon that, should do quite well this year. And bonds are still historically low, so it's a short that can hurt. Yeah, but it is a nice hedge.
Joe, he was adamant too that if you look at where things were in 1999, yep. Both from a global growth standpoint, both from an interest rate standpoint, that there's absolutely no comparison to 1999 and today. And even as some take a look at, say, where the big and most popular technology stocks are today, even though they've moved, he said, yeah, but they're still opportunistic because of the growth that Weiss suggested is ahead. And their multiples are not outrageous.
Right. And no disrespect to Howard Marks or Jeffrey Gundlach or anyone else, Lee Cooperman, who have offered an opinion on the market, but these are the most relevant comments that I have heard, and we just heard them now for the first time, about the market. And I think one of the things that's really fascinating is if you think back to the Monday before the election, it's pretty obvious he wasn't a fan of the president. And there is nothing in the commentary right now about the administration. That's why he's legendary, because he's able to remove himself from a narrative or a predetermined bias and look at the world as it is. Earnings, the things we talk about on the desk. Earnings, global growth, and a market that over the last week sold off, came back quickly, and is giving the appearance right now, Scott, where you're seeing the rotation go back into those FANG names once again.
I'm saying I wouldn't use the word that he's, a raging bull on the stock market by any stretch of the imagination. But he is pretty bullish on what the global growth picture, Doc, looks like today, certainly relative to past periods. Yeah. But he is positive on where the U.S. and the rest of the world seems to be growing.
I am as well. We said it the day after that huge decline last week, Judge, that created some opportunity, now not as large an opportunity as, for instance, election night or after Brexit and things like that. But nonetheless, it was an opportunity, and the volatility was so extended and so forth. I think Mr. Tepper is, just as Steve said, and they're good friends, a very wise investor, and he's looking across those asset classes. Bonds, I don't think they go very far from here, Judge. And, for months now, we've collectively on the desk been saying that. I mean, high end for bonds, maybe we get to 260 this year. Maybe. I don't know if we can even sustain at that level, depending on what goes on in the ECB.